Hello everybody, Joe Malone here, coming to you live from Dallas Trading Floor. It's Thursday, and the Dow is up once again, but the Nasdaq, not so much. It's a little bit soft. The Nasdaq has been pulling back, and the Dow is it's firming up, but we're still seeing that rotation from some of the from the techs into some of the some of the Dow names. I did have a short on Peloton this morning. I did close it, probably closed it too early, but I made a little bit of money on that this morning, which was nice. And I may be looking to possibly go short on some of the other issues. A little bit dangerous to to short when the market is still in a confirmed uptrend. We are still in a confirmed uptrend, so you got to be very, very careful if you do that. But definitely kind of a good way to to get in on some of this volatility. Just wanted to show you the well, that's a little bit before our times. Let's go to the slides here. I had it set on the wrong thing. So here we go. Okay. There we go. Okay, so basically we're still in a confirmed uptrend. The Nasdaq, as I said, is down about 2.28%, about 370, 307. It's fallen below that very key level, the 50-day moving line, very key. The S&P is down today. The Dow Jones is down slightly. It was at record level, so but we're sort of treading water. We may. It's looking like it's kind of weak. So we are still in a confirmed uptrend, but we may be rolling over here. So we got to be careful about entering new positions here. Right now, it's probably a good time to be fairly in cash, because it doesn't, it seems like, yes, we're in a confirmed uptrend, but it seems like it's losing some strength. So we just don't know kind of what happens. So it's a time to be kind of cautious. This is a chart of the Nasdaq Composite. And by the way, for everyone looking on TikTok, if you could jump over to YouTube, youtube.com/Dallas Trading Floor, then you can see kind of what I'm talking about in terms of the charts, because I can broadcast the charts on that as well. So we've pulled below this key level here, which is that 50-day moving average. So on the daily chart. So this is key. It looks like we pulled back. It came up, and I thought we were going to have a reversal here, but it's not looking like we have a reversal. We might be continuing a downtrend. So it's time to be a little bit careful on opening new positions. It will tell. The tail will be told probably tomorrow to see how we end the week and see how we end the day. But it looks as if we made an attempt at a reversal on the Nasdaq, and it does not look good. It looks like it's moving lower. Also, even though we have a high on the Dow Jones, this is the Dow Jones ETF called the Diamond. It's pulling back a little bit too, so it's definitely above, significantly above the 50-day moving average line, so that's good. But it does look like we may be getting some weakness there too. So we just don't know. It does kind of look interesting. Now, here's one of the things that's leading me to believe that we may be going back to a market trend under pressure, and that is the margin debt. Currently, as you can see, when it gets over this red line here, and that's about 52% margin debt, it has gone up straight shot since the beginning of the year. So this margin debt is a concern to me, because I do believe that we may be getting near a top. This is what happened way back in 2007, which basically was the beginning of the very deep sell-off when Lehman Brothers went under. That was in 2008, probably before a lot of people were trading here. But we are building that margin debt up. Now, of course, we're in a unique situation here because of the Fed pumping all the money into the economy. But this is something to watch. I am not as confident in the market as I was at the beginning of the week. It looks like we tried to make a reversal, but you will see if that reversal holds. As you can see, all my positions are down today. Rena Center, Granite Construction, Simply Foods, Delta Airlines, and Fluor. So, we're looking possibly at, maybe a return. And I may be moving to the short side here. It just depends. It depends on how everything is shaped up. It's a tough. Right now. It's a very tough market to trade because it's just kind of all over the place. So, something that's kind of difficult here. So, without further ado, let's take some questions. Thank you for holding on here. And the first question from Alex. Thank you very much. Thoughts on F? And let's F. Of course. I was stopped out of F. That's Ford for everybody. The interesting one, it's funny, as Tesla has weakened, we've seen rotation into GM, into Ford. I was into Ford, but I have closed all my positions in Ford. I have closed all my positions in Ford currently. I'm waiting, for something to get back in, but right now I am out of most of the positions. So let's kind of take a look to see. I can size that up a little bit. There we go. All right. So hopefully we can see Ford here very quick. Here we go. Ford. And let's bring it up on our screen. There we go. So, basically what's happening is we still are in a confirmed uptrend. We're still in an uptrend on Ford. As you can see, we have a good relative strength at 83, so that's good. We did test the 21-day line basically yesterday, and we moved up to the 10-day line, and then we immediately moved back. So we're in this little very tight trading range right now, from the 10-day to the 21-day line. The question is, what will it do? Well, it looks like it's moving down, so I am seeing some weakness, unfortunately, and I think that we might see it move below the 21-day line. If it moves below 12.15, I think it's a good time to sell it. I just don't know what's going to happen, but it's showing some weakness. We're still pretty far out from earnings, 41 days, so that's looking pretty good. Let's kind of look to see sort of what's happening. The checklist is very good still. It's basically 77%, so that's looking pretty good. The ownership on it is improving. It's up. So the number of funds that are in it are up. It's the rank of the automobile manufacturers has fallen somewhat, and that's really due to Tesla as much as anything else. Now there is kind of a standout in that group, and of course that is Volkswagen. Volkswagen has been very strong, but Tesla has been weak, and it looks as if I still think it's worth holding Ford because it is they do have a lot of EVs coming up. I do like it, but again, I was sold out basically. I sold out when it moved when it made this recent move. So I took my profits and I went away. I'm kind of waiting for a better entry point on that. But let's look at Tesla because that is the key in this area, and it just continues to move lower. Currently, Tesla is trading at 658, and it looks like it is going to trade below 650. That's a key level. If Tesla moves below 600, then we have confirmed that we did not have we're continuing the downtrend. We had a reversal, but when it went up to the 21-day line, it looks like it's fading now. So we may have another situation where it has moved up and then and then starts to move back. So that's the reason I bring this one up, of course, is because it's the key. Here's the thing I would do with Ford. I wouldn't be entering any new positions in Ford right now because it does look like it possibly is going to be pulling back some more, at least in the short term. So I wouldn't be initiating any new positions in Ford. But if I had it, I wouldn't sell it. But I would set my stop loss up probably at about 5% because I do think this one is likely possibly to see some more weakness. So it's better to be very cautious right now. The market seems to be changing character. So that's sort of my long and short on Ford. But it's still a great stock, and it just the marketing seems to be weakening. All right, TM, of course, that's Toyota Motors, bought at 153. Let's take a look at that real quick for Will. TM, and let's see if we can. Oh, nice! It made a very nice move today, right up into the buy zone. So, it seems like the love is, this is an interesting sector. So at 153, that's very good. So I'm gonna show everybody basically where that where that is. So I'm gonna put in a 153 on the alert to kind of show you kind of where it is. So we've definitely moved above that. We had a very nice, sort of almost a gap up. It's up $3.95. Here's what I would do, Will. You made a very good buy, but what I would do is I would kind of immediately come back in and I would set my stop loss right at about 155.81. And the reason I would do that is to protect that nice profit, because I do think it does look like this is an upward trend. There's a very large volume spike here. So that's looking pretty good, actually. Your buy is looking very, very good on that, Will. So that's looking good. I think you should just hold it. But again, I would push my stop loss up to about 156.30. So let's take a look at some of the people that have just come in with us on TikTok. Victor Leon 9512 says, "Hey Jim, how are you doing? What do you think is going to happen to Palantir PLTR?" Let's kind of take a look at the chart of Palantir PLTR, and this is it's been pulling back as of late. Unfortunately, right now, and I was in Palantir too, and I got shaken out of this one. What happened was it pulled up to the 21-day line. Unfortunately, it crashed into that and it's moved back down. So currently it is in a downward. It did make an attempt at a reversal, but that reversal failed. So it does look like in the near term we're likely to see Palantir move lower. So here's the thing: I would probably, if you aren't already stop lossed on this one, I would probably look at a stop loss at about 22.50. Currently, it's trading at 24.12. It's off $1.09 right now, about 4%. So that's a significant decline, and it does look like, looking at the candle here, that we are at the near the day's low. Remember, it's not how a stock opens that's so important; it's how it closes. So if it closes down at the down at the bottom of the candle, at the end of the day, it's probably a good idea to to look at that as possibly a trend. And unfortunately, the trend is not up on this one; it's down. So, if you have more than 7% loss, and I know this is painful, but I would recommend cutting your losses, just because you can always get back into the stock, but it's painful when you're taking those losses and they're mounting. So, I would be a little bit careful. Right now, the market has changed character, so it's a little bit more difficult to trade right now. I'm very heavily in cash, kind of waiting for the correct setups or shorting. That's about all I'm doing right now. I do have some items in the small portfolio, but I'm very, very lightly invested right now, mostly in cash, waiting for the right setups. So if I were down more than 7% in Palantir, I would very much be considering taking some off the table right now, because it just it's not worth losing the hard-earned gain. That's the thing. Thoughts on TPL? Let's look at TPL. TPL. And that is, Texas Pacific Land. This is a very interesting company. As a matter of fact, this happens to be right here in Dallas. And I actually, interestingly enough, I know personally the landman for this company. This is a very interesting company. It used to be a railroad called the Texas and Pacific Railroad, but it's no longer a railroad. Basically what they do is they own mineral rights, and they're very successful at this. And they own them basically all the way from the Permian all the way through many, many counties in Texas. It's one of the largest royalty trusts out there. It's down a little bit, but this is this is an interesting, this is basically not a production company. These people just own basically producing interests in wells. So very interesting company. Would I invest in it right now? Well, it's definitely moved up. And by the way, this is in one of the top sectors of the, this is in one of the top producing sectors. This is the number one currently. This is the number one sector in the entire economy right now. It's called Oil and Gas Realty Trust, and it's number one out of 197 sectors. So this is the number one producer. This is the number one area. There was a large volume spike. It's pulled back just above the $1,500 level. This is a very interesting play. This is really, really for the big boys, in my opinion. It's got a 55 checklist, but this is such an unusual thing. Basically, what they do is they own interests in mineral rights. Most of these are, producing wells, and so as the price of oil goes up, so does this. So does this one. So this is very interesting, David. I really appreciate you bringing up this this Realty Trust. There's another one called the Williams Coal Seam Trust, which I think is still in existence. There are a number of these out there. Basically, what they are is what they do is they take all these assets that are producing wells, they package them up, and then they. Oh, I got an alert. I just got an alert on. Let's see what I got an alert on. Yeah, okay. I got an alert on Fluor cross below. Okay, RVB cross below. Yeah, so interesting. Well, Peloton looks like it's moving up. Okay, good. Well, I definitely shorted that one properly then. But it does. That's very interesting. I get alerts all the time, so I apologize for that. Looking at that, I did close my short on Peloton. I opened it this morning at about 106.75, and then I closed it at about actually at 104.75. So I did okay on that one. Not too bad. So with Texas-Pacific Land Trust, I don't necessarily recommend it, but there may be some alternatives. The Sabine Royalty Trust, this is similar to it. It has a very weak relative strength though. This one is 30-10. So this group is a tough group to invest in. Texas Pacific is definitely totally the best of the breed in here. TPL is definitely the best. If you have some money that you want to kind of put away for a rainy day, this is not a bad place to park it. Not a bad place to park it at all. I just want to show you kind of the history of this thing. As you can see, this is basically since 2000 and well, let's see if I can give you an exact. There we go. Yeah. This has been basically, going up essentially since 2012, and as you can see that the trend on this over the years has been very, very significant. It's got a relative strength of 96, which is, it doesn't get much better than that, to be honest with you. I mean, look at this relative strength line. This is the blue line here. A lot of heavy buying. A lot of big boys are parking their money here. It's up $434 today, so it's one of the top gainers. But it's a very, but again, it's a very, very large trust. So, can you make money in this one? Absolutely. I would be a little bit cautious now that we've seen, I'd be a little bit cautious on this one now that we have seen, several days of it, basically moving, moving higher. But, because that can be, sometimes a situation where you can, there will be a pullback. So let's look at the daily action on this. Yeah. Okay. So yeah, and again, there's a pullback. And it seems like there's support on this, at least in the short term, at about $1,500. It's at $1,538 right now. So let's see how this one, if you're interested in entering this one, let's see if this gets some support at about $1,500 maybe tomorrow or in the beginning of the week. And you might want to watch this one because this is a very, very interesting, very interesting, and for full disclosure, I do know the head landman there, so it's a Dallas company. Okay, let's see. Thoughts on DraftKings and Penn National Gaming. Let's look at Penn first. I've played this one a number of times. Penn National seems to be the stronger of the two, but they kind of keep you know, they kind of keep going back and forth. This is currently with Penn National. We've tested the 50-day line, which means that we're probably going to see this thing bounce. Let's look at. I'm going to look at the 10-minute chart on this to see how it's been trading throughout the day. So yeah, okay. So I do suspect, based on this, that we're probably going to see. Yeah, we've had one test of the 50-day moving average here, and then we had it here. So it's been pretty solid. The question is this a reversal? I don't believe this is a reversal. I do believe this is a test, and I do think that we're going to see it probably bounce here. But the question is, will it pull below the 50-day line? I don't know. But currently, the 50-day line is tracking at, let me give you the number on that one. The 50-day line is tracking at about 112. So we're basically right at it, and we're right at almost at the close. So I do think that we may see some support here. Here's what I would do. Watch this one because we may see a bounce off the 40-day line. And that would be nice if we had a bounce off the 40-day, because that's a good potential there. DraftKings, DKNG. Let's look at that stock as well to kind of see. Yeah, okay. It's same pattern essentially. You know, now this is testing the 10-day line as opposed to the 50-day line, which is the case with Penn. This one's off $3.15 today. Again, this is a question is, now this one actually came out of a base, a cup with handle base at 55.98, and this is at 67. So Penn did not come off of a base. So here's what I would say on this one. They both look, you know, I'm looking at both of these, but of the two, Penn National is the stronger issue. There's absolutely no question about it. Penn National is stronger issue, but it is not as extended either. The DraftKings is above the 21-day line, and Penn National, and I'm gonna pull the Penn National chart. It is basically tested the 50-day moving average. So here, and that's off $12. So the question is, will Penn continue on the downward trend? I think it might. I do think that there's a cooling off in this space. So of those two, I wouldn't pick either of them. I would wait until we have a reversal, because currently both are in a downtrend. I hate to say that, but both are in downtrend. So we probably don't want, if we're in them, we want to set our stop losses relatively tight. For Penn National, I would be looking to set a stop loss no more than at about 110, which is very tight. And then with DraftKings, I would be looking also to set a stop loss, but I wouldn't enter a new position in either of these because they both look as if they're continuing a downward trend. They're continuing down, at least in the short term. In the last few days, they're both in a downward trend. So wait for the reversal on these. I wouldn't pick either of them. Terrible to say that, but it's kind of what I believe. I am in VZI at 17.5. Do you see another? Oh, it's Kathy Wood's favorite. Okay. Well, here's the thing about a lot of people are following Kathy Wood, and she's really a great stock picker. But here's the thing: when too many people start following any one person, sometimes people anticipate that and they sell. So you got to be a little bit careful. I mean, with that currently, because it is a situation. But it's up nicely today, $1.70. So this is in a confirmed uptrend, and the relative strength is strong. And you're in at 17. So you've done very, very well. Yeah, very, very well in this. You're in it. Let me see exactly. Let me put an alert on that one to see. You're in at 1750. All right, so that's basically right here. We're pulled up way above that. Hey, you know what? I would be pushing up my stop loss here. I would set my stop loss currently at about 20, and I think if and basically wall off this profit. This is one of my strategies when you see a stock that's ascending like this. You want to continuously move your stop loss up. Eventually, you're going to be stopped out, but that's not necessarily a problem because you can get right back in. The most important thing is to capture the profit And currently, if you were to set a 20 stop loss on this one, you would automatically capture, you would capture this 2.5, basically the 2.5 in there. So that's pretty good. That you could capture right now, by setting that 20 stop loss, you could capture about 10% profit guaranteed. So that's very good. That's a very good thing, Dinesh. Yeah, so that's what I would consider doing. And it looks like you have, you're in a good winner, and it is an uptrend. The stock is definitely in an uptrend. So looking very, very, very good. Thanks for that, Dinesh. Appreciate it. Hey, Jim. Could you any betting stocks? Any betting stocks you could recommend? Right now, it's tough with the gaming stocks. Normally I would say Las Vegas Sands might be good, or MGM. Let's take a look at MGM. MGM Properties, you probably know, is and they potentially would benefit one of the biggest from any reopening that would happen in Las Vegas, but they're down. It still looks pretty good. There's no real place to buy them. This is a tough sector right now. It just seems like it's not it's not giving us many opportunities. It's still a good sector, but we're not looking and seeing as many opportunities. Let's see if I can find something that might be giving us, really in this game. I mean, I think you really have to look at either Caesars, CZR, or Penn National. I think those are the two best. Penn National is pulling back right now, but let's look at Caesars. This is symbol CZR. I do like Caesars a lot. There was a buy point on Caesars on a consolidation base at about 60.08. It's currently 90, so it's pretty extended from that base. But we're still, hugging that 40-week line. So that's actually pretty good. Would I buy it at this level? Wow, this is a tough entry, but I do like the action on this one. Caesars, I'd only buy it on an uptick. It's currently 77%. Let's look at the ownership to see kind of where we're out there. Yeah, we're definitely moving up. The funds are moving into it. We've got Janus in there. These are some very, very good stocks, very, very, very good funds that are in these that are in these right now. So it's looking very good. Let's look at the industry sector. 33 out of 197. So that's very, very good. So this is one I think you want to put on your watch list. It's pulling back today. It's down significantly, $9.83. So I don't really recommend buying it today, but I do recommend watch listing this one. Caesars, CZR. It's got a very strong relative strength at 97. The best of the breed right now is Penn National in the gaming space. That's the best one, PENN. But second place, I think, would be would be CZR. Also, you might want to look at this is interesting. 500.com. I don't know this stock. This is a fairly new one. Yeah, look at that. Wow, look at that. Wow. No, this is one you might want to. Yeah. Okay. Caesars. I'm just looking at Bailey. Let's look at Bally's. Yeah, they all pretty much have the same kind of setup here. Scientific Games, of course. This is an interesting one as well. But all told, I think in the gambling stocks, I think the best one, the best of breed right now is Penn National, and it has been pulling back. So you got to kind of watch this. So right now, it's kind of tough in the betting stocks, unfortunately. All right. Hey, Jim, do you think we're over the correction? Yeah. No, I don't think we're over the correction. I wish I did. But let's pull up the let's pull up the Nasdaq Composite to kind of take a look at it. I don't think we're over. I don't think we're over the correction. And this was just minor, by the way. Here's the thing. Last year was a very unusual year. It was a very easy year to make money. It's going to get a little bit more difficult coming up, I believe, just because of the way things are. But we did you know, I thought we had we did clear the 50-day line here, but it looks as if we're pulled back again. So the question is how the Nasdaq Composite closes tomorrow. If it closes down, I think that we might be you know, back once again into into correction territory. I hope not, but if we are, stick with me because I'll show you how to make money in a correction, and that's by shorting. And again, I did a short today, kind of a test short on Peloton. I opened the short at 106.75, and then I closed it at 104.75. And I probably could have made a little bit more money on it, but I was just kind of testing the waters. And then several days ago, I shorted Lululemon, and that worked out as well too. So I do think that we may be seeing it move back lower, unfortunately. Let's look. Thank you for this, Jeet 1256. Let's look at WPRT. So let's pull this up really quick. WPRT, and that is, when I don't fat finger it, that's Westport Fuel Systems, and they manufacture a high-performance, low-emission fuel for injection systems. So interesting way, using natural gas. So it's kind of an interesting play. This is essentially a stock that's under $10. Typically, I like to stick above that just because they tend to be less volatile. This one, unfortunately, or fortunately, I mean, this has a very good relative strength at 99, so not necessarily bad. They had some very nice earnings as well here. They just came through earnings up 200%, so that's looking very good. Let's kind of look at the weekly chart and let's get some idea of sort of what we're talking about here. It's off a bit today, about 83 cents. It's at 81.91. I'm sorry, $8.91. Here's the thing. We do have some funds that we have 33 funds. This is a relatively thinly traded stock. It doesn't obviously have any return on equity yet, but it does have positive cash flow, which is a very good thing. So, you know, a lot of startups don't have that. The sales were up significantly last quarter, about 13%. So, very good on that sense. So, would I be interested in this one? Well, it's in an interesting area. We do have, and again, we have 33 funds in it. The industry, unfortunately, is a little bit weak. It's 123 out of 197. So the industry is a little bit, the industry sector is a little bit sleek. You know, with a 55 checklist, and that's essentially what we have here, I would unfortunately tell you not to buy this one. I think you got to wait on this. It's just, I think it's going to be difficulty for you. So I would watch this one. But I wouldn't buy this one right now. I don't think, I think you got to be a little bit careful on this. So what I would do on this one is watch list, but don't buy. Okay, so, all right. So basically, I think the thing for this one is basically to do a watch list on this one. Again, the symbol is WPRT, but watch list this one possibly, but don't buy it yet. It's pulled back. Let's see if it reverses. If it reverses higher, if it reverses above about $10, then I think you could possibly consider buying it. But let's wait to see if it reverses, and it looks like it may have bounced off the 40-day line. So if it moves above $10, I think you might be able to buy it. But right now, I think you got to be careful. Never try to. This is the tough rule, but try not to buy anything as it is pulling back, because it just, So right now it's pulling back, but you're gonna wait maybe until it bounces, and then. So a buy stop limit order above $10 might make sense on that one. All right. Oh, we already did that. Thank you. Is there any hope for Workhorse? Workhorse was great. I was in this one several times, but when they lost that contract to Oshkosh, it was a fatal blow, I think. Let's take a look at the weekly chart first. Basically the thing with with Workhorse here is that we've fallen below that 200-day line. And I just won't enter a stock below that 200-day line. That's this black line here, basically at about 21. So I just, even though it's moved up a little bit after hours, I just think this one is, you know, I think what you got to do on this one, and this is, you know, it's kind of like the Gong Show. I don't know if you probably don't remember the Gong Show, but this is a sell it. So I would sell this one right now because it might come back, but then again, it might not. So here's what I would do with Workhorse. I think you got to consider selling right now. Preserve your capital. There'll be other opportunities, you know, but right now I think you got to sell it. I think you got to sell it while there's still chance. While it still has, while it still has some nice profit in it. All right, let's look at RXT. RXT, and that is Textron Industries. Textron is a very interesting company. As you know, they own Bell Helicopter. And of course, that's in beautiful Hurst, Texas. That's where they make the helicopters that you see. You know, all the police helicopters seem to be made there. So I do think that there's, I am bullish on this sector, on the aerospace defense sector, because I do think, unfortunately, we are probably going to go to war. We've already gone to war in Syria. A lot of people in the country don't know about it. So I think there will be demand for this kind of product. I'm not proud of that, but Boeing is up. This one is going to be following. You know, this one is going to be kind of in that group. This is really, even though it's Textron, they basically make. You know, they basically own. You know, a number of companies in the, you know, both the general aviation business and also in the commercial defense area. And of course, they make Bell Helicopter as part of the group. Cessna is also part of the group, and they're based in Wichita, Kansas, of course. Big manufacturer of planes, both single engine all the way up to jets. So I am relatively bullish on this group. But right now, it's still really not ready for prime time. It's only got a checklist of 55. I typically like to see a little bit more strength. A lot of funds are in this one, 942 funds, and the industry rank is quite good, 74. It's improved a lot out of 197. So definitely like this area. The aerospace and defense group has been doing better as of late. This has been a laggard for a long time. So I do see some movement out of the tech area into this group. Now, you would think this is actually a kind of a, you know, because it's aircraft, it's not considered tech, but it really is. So in what they do. But I do like this sector. I do like this chart. Would I buy this right now? Well, it's not ready yet because we need to see, I believe, you know, the last real opportunity here was a flat base, and that was back in January, and that's so at 48.96. Now, here's the thing: we are above the, we are near at higher highs. The higher high is 53.91. So, and there was a big movement. So here's the thing: I think we have to wait a little bit on this one. This one, wait for this to form a base. This is basically going to probably form a base. So I think what you got to do with Textron, with TXT, is to wait for it to form a base. And of course, what do I mean by this base? Well, what I mean by this base is this is either like a pattern like this. This is called a consolidation, called a flat base, or a consolidation pattern. They're basically three very strong bases, cup with handle, and then double bottom. It doesn't look like it's in either of those, but I think the thing to do is you just got to wait on this one for it to form a base. This is a kind of a frustrating market because, you know, here I am, you know, where a few months ago I was saying buy. Right now I'm saying, you know, be a little bit more careful just because this uptrend does not look like it has strength. So you know, we've got to be careful that it might roll over. IPOE before and after merger. Oh, okay, that's interesting. IPOE. You know, sometimes you can play those very. Oh, that's okay. Social cap. Blank check company. Here's the thing, Amid. I just got. I mean, I know I sound kind of like a blank record. I mean, everyone was talking to me about CCIV. I just don't like these blank check companies because I just don't know, how they're going to trade, and I'm a little bit leery of them, to be honest. I would like to see, I would like to see a little bit more strength. So here's the thing. I would not buy this one. I don't like blank check companies. I think you've got to be very, very careful with blank check companies, even if you know what they're going to buy. So I would say, blank check company, wait for IPO. Wait for merger. That's really what I got to say on these. Because these are blank check companies, I just think you got to be super careful in terms of them, and I think you got to be really, really careful about buying them because you just don't know how the market is going to react. So I can't really recommend it. Again, I can't really recommend this one. So I think you just got to wait, and that's always frustrating. You're sitting with capital, you want to invest it, and you're waiting. So it's tough. Okay, let's look at Apple. Thanks for this question. I'm in Apple through a spread that I have on right now. It's a bull call spread. I may have to close it if Apple continues to work the way it's gone. So it looks like it failed on its breakout. Here's the here's the chart of Apple. We can see it pulled above that green line. That's the 21-day exponential. It failed at that, and then it's pulled back twice, and it's now below the 10-day line. So I do think we're going to see it trade lower. It looks like it's going to possibly trade. Let's see if it trades below. If it trades below 120 tomorrow, I'm gonna edit this this alert that I have on it. But I think that the key level here is 120. And right now you don't want to enter the stock. Let's see if it turns around. Let's see if it turns around. But it looks as if we're unfortunately it made a reversal attempt, but it looks like that failed, and we still seem to be in a downward trend. So I would not enter a new position here. I just think we've got to wait. Now, maybe it's possible that it will pull all the way back to the 200-day line and then bounce there. If that's the case, then that might be an excellent place to buy it. But right now, I think you've got to be a little bit more careful with this one. It's the trend is down on Apple. So with Apple. So basically what's going on here is, with Apple, the downward trend continues, and it's just continuing to pull back there. So not a good time to enter Apple. It's not a good time to be bargain hunting, but it is after hours. That's a good sign. It pulled back $4.23, or about 3.39% today. So pretty significant when it comes to that. So I think you got to be a little bit careful. I'm monitoring Apple very closely for another entry point because I do think that if it does reverse, it could be a very, very good opportunity. But right now, I just don't think you can do anything with it. In Upstart at 84, when do I sell? Wow, I wish I was in Upstart. Wow, that's a great one. Let me see. Let me look at Upstart. UPST, thank you. All right, so UPST is the symbol for Upstart. This one has just gone vertical. Here's what I would do. Hey, Kian, this is fantastic. You are a rock star. I wish I was in this one. This is Johnson. Here's what you want to do. Set your stop loss right at here at 105.58. Right there, and here's why. Let's see if it gets support at this level, But here's what, this is going to pull back, okay? And how do I know that? Because it's so far extended from that 10-day line. This is going to pull back. You know, the question is when, not if. And I think that you ought to set your stop loss at about 105.58 and just keep moving that forward. It's off a little bit after ours, up $3, about 3% after ours. I think you want to protect your profit. Here's the thing: it's probably likely to open lower tomorrow, but hopefully it'll open above 105.68. But what I would do is I would consider setting a market, not a trailing stop loss, a market stop loss at 105.58, because I do think it's going to pull back and relatively hard. So that's a very, very good question. 105.58 is where I would be looking to set a stop loss, because I do think that that's going to be where, you know, hopefully it'll stay above that, but it's going to definitely pull back. It's so far extended from the 10-day line that I think, I mean, I wish I was in this one, because, you know, and it's funny because it came across my screens and I, you know, but I think it's great that you're in it. Just protect your profits because it's likely to pull back. 105 would be a really good level, probably, to put a stop loss. Yeah. Okay, why UK 100 going down, mate? I don't know. The UK 100. Well, the whole market is pulling back right now. So you know, the FTSE 100. Let me see if I can get a symbol for that. FTSE 100 index symbol. And this, I don't remember what this. Yeah. FTSE, I believe. Let's see if let's see if I can get that. FTSE. No, it's not going to let me. It's not going to let me see it. Okay. Okay, I don't know what the symbol is for. There is a index fund. There is an index that's going to let me see if there's a FTSE 100 ETF. There's an ETF for everything. So, okay, find the best FTSE 100 index ETF. Let's see. Okay. All right. It's not letting me see it. Oh, come on. What a bore. All right. I've got an issue with cookies here. I've tried to, it's frozen. Okay, oh, shoot. Let's see. So let me see if I can find a symbol for that. Oh, here we go. iShares, they seem to have one for everything. It's amazing. Let me just see if I can. Okay, it's crap. It doesn't have it. This is a. No, I can't get. Unfortunately, I can't get a symbol for that, so I'll have to move on. But interesting question there. Interesting question. So I'm afraid I can't answer that one. All right, NIO just announced a NIO truck. Well, I hope it's, yeah, I hope it'll do well. So let's look at NIO. You know, I was trading NIO this summer. I've been out of it for a while. Yeah, the market has not reacted to it yet. Maybe it will tomorrow, but it looks as if we're still in a downtrend on NIO. So be careful on NIO. Until there's an uptrend, I don't think you want to buy it. Oh, let's look at Oxy. Occidental Petroleum, as you probably know, merged. Well, actually, they bought a company called Anadarko, and you know, and unfortunately, it was right at the very low of the, you know, of the the price on oil, and so I think the CEO had to resign. But it may turn out to be a very, it may turn out to have been a very good very good move. But the problem is, right now the market is still pulling back, but it has been moving higher as of late. So, this one definitely, potentially is a buyable. I mean, it's got a relative strength of 85. It looks like it's just pulled through the 21-day line and tested. If this thing reverses, and this is kind of the reversal that we want to see, if it reverses higher, above that, then I think you can buy it. Right now you have to watch this one, but it's showing some very nice signs. The alignment of the trend lines is very good. You've got the 200-day line, which is at the bottom. You've got the 50-day. You've got the 21-day. So they're all aligned properly, and this is a turn. And it basically turned at the end of December of last year. This thing turned northward. So the trend on this is upwards. Still doesn't have a very strong. It doesn't have a strong enough checklist. Only 55, but it looks like it's improving. We definitely have. We've had some issues with the number of funds that are in. 1,146 funds are currently in Occidental, but that's off significantly from 2019, where they had 2220 funds in it. So that's looking a little bit weaker. It's got a very strong industry sector rank at 22 out of 197. So what would I say with this one? I think this is potentially good, but I think here's what you got to do with this stock. I think you have to probably wait for a base. Let's look at the monthly chart. I kind of want to see how it's been. Yeah, okay. So here's the thing with this. What I'm showing you here on the screen is the monthly chart. This goes way back to basically 2003, a long time. This is basically trading below. It's starting to come to a level where it might be really tradable again. I want to see this thing move to about 38 or 37 or 38 before I'd really be more interested in trading this based on this monthly chart. But you can definitely watch this one as the demand for oil picks up with the reopening of the economy. This one ought to do very well. So this right now is a watch list. It's a good stock, and I think this is where you ought to be looking as well. Let's look at Gush. This is an ETF, interesting ETF. This is a 2X ETF that basically tracks the S&P oil, and it's down a little bit today, but it's been moving up very nicely. This thing really, man, I can remember this thing really bottomed, and it bottomed at about basically 17 bucks. It's been going up ever since, but we did have a very strong reversal. It was down $11.18 today at about 70, 78, but it does look like after hours it's pulling back. So there might be a very nice reversal opportunity on this one, Tangier. This is a good call because this looks as if it may be moving higher to, this looks like it's going to have a dead cat bounce, probably up to about the 10-day line, which is about 82. So you could possibly make some quick money here if this thing opens up higher. It does look like it's going to open higher tomorrow. I would be possibly looking to hold, hold Gush, maybe for this is like a day trade. If it opens higher, I think it's probably going to move up to at least the 21-day line. Let's get a actual price on that. I think it's going to move. I think it's going to move up to at least the $77 mark because I think it's going to move up to the 21-day line. But after that, I don't know. So there's probably a swing trade capability here on this based on what I'm seeing. But right now, of course, you don't want to buy it in a downtrend. It was off $11 today, but it looks like it may turn higher. So if you do decide to trade this one, be very careful on it. Be fast on your fingers because this one can reverse on you very quickly if you were to buy this on an uptick. But it looks good. It looks good, and I like this ETF. I like Gush because I do think that once the economy reopens, I think we're going to see a lot more, a lot better situation. And Gush, you could definitely benefit, at least in the short term, from Gush. Let's look at VT SAX. I don't know this one. This is interesting. Vanguard. Okay, this is total market. All right, so this is really very much of a. Yeah, look at the daily. Okay, so this is interesting. This is an interesting ETF. This is basically everything that's listed And this actually kind of makes sense because right now the Nasdaq hasn't been doing as well, but the S&P and the Dow have been doing good. So by going with the total index, you basically you're going to dampen you're going to dampen those the effects of the Nasdaq. So that's not necessarily bad. As long as we're in a confirmed uptrend, this should do well. So very interesting. Let me look at the weekly on this one. Yeah, okay, so it almost exactly follows. This almost exactly follows the overall market. Let's look at the monthly. Yeah, look at that. Wow. Since basically this was the last really bad cyclical bear market that we had, was from about 2008 to early 2009. I don't know if you remember this period of time, but almost nobody in the market was making money in the market. This is when I got out of the market completely, and I started buying houses actually during this period. But you can see we haven't had anything to resemble that downtick. This is an interesting interesting index, but VTX. So overall, we're moving up. So if you were to buy the whole index, I think there is an ETF that buys the whole index. If you buy the whole index, you might do well. But very interesting. So overall, we are in a confirmed uptrend. That's what that tells us. All right. Next question. RVP. And as everybody knows, I do like RVP, but I haven't looked at it today. I'm not in it currently. But retractable, yeah, it pulled back. It's a volatile stock, I'm telling you. Wow. Okay, let's look at the weekly. Yeah, look at the daily. Okay, there we go. So here's the daily on retractable. And yesterday I drew this trend line here. We did not break it. We peaked our head above it, and then we immediately went down. So we're still in a downtrend, but we have a relative strength of 97. So if it breaks this trend line, that's where I think you possibly could buy it. But right now, I don't think you can. Interesting. But the trend line that I have here is this one, and if it breaks above that, if it breaks above the 50-day moving average, then I think you could buy this once again. So if I wasn't in this one currently, I would wait until it moved up to about 15. If it moves above 15, that's where I want to buy it, because that will confirm an uptrend. But right now, unfortunately, it made an attempt to reverse, but it didn't make it. So it looks like we're still in a downward trend on RVP. So it is up after hours though, but it pulled back pretty significantly, 7% today. That's a lot. So these are pretty volatile. Okay, let's look at the spider, and of course this is the S&P. This is one of the largest ETFs in the world. It covers the S&P 500. There's a lot of representation in the S&P 500 of small regional banks. So this has actually been this is outperforming the Nasdaq because of that. The financials are finally getting a break. It's still pretty weak. It's up after hours. Almost 0.09%. So not a lot. And it was off today significantly. But again, what it did, it traded down to the 21-day line. And it looks like it bounced. So that's been the case for a lot of these things, as you can see. It regularly pulls back to about that 21-day line, and then it bounces up. Sometimes it's been some of these times it's been pulling back to the 40-day, but it still is in an uptrend. The spider is still in an uptrend, and it's still above a key. It's still above the key level. The key level on the spider is this 40-day moving average at about 285, and we're above that, so that's good. As long as it stays above about 285, at least in the short term, we are in a continued uptrend. So if you were to park some money there, it probably wouldn't be a bad place to park your money. Okay, well, I have I have yammered on for an entire hour, and I would like to show you this. If you'd like to subscribe to my free action trailers, it's very, very easy to do. all you have to do is go to this address. It's https://sendfox.com/Dallas Trading Floor, and just need first and last and a good email address, and we can get you on this. Of course, it's totally free, and we can send you out the action trailers, you know, spreads that I'm doing. Sometimes when I'm doing shorts, I will send out action trailers. So that's a good way to get in on some of that stuff, of course. And if you haven't already liked us and subscribed to us on YouTube, and you're watching on YouTube, that would be, you know, if you could, you know, hit that like button and subscribe to us on YouTube, that would be really great. Really appreciate that. So until tomorrow on Dallas Trading Floor, I will see you back here at 2:30 Central, 3:30 Eastern. Happy trading. I hope that everybody is doing well, and you know, be careful. The market is still not really in a it's not it is, even though we're in a confirmed uptrend, the market has been weakening. So be very, very careful initiating new positions right now, as the market may roll back down and into a little bit of a correction. So be very careful. I will see you tomorrow at 2:30. Happy trading.